mastered. Again, that's proprietary Bindle FX. So these are the pivot points which are different to the normal pivots you get from the charts. Yeah. Again, they're purely based on price action. Yeah. So again, if you really look at it, there's absolutely no way one can trade a chart like this, and I have seen even worse charts than what you see here. Too much of garbage, and the cleaner the chart is, you can actually see the price action. Yeah.
Jay, is that
Yeah.
the red line? Is that the moving average?
Yes, I mean that's it's not exactly a moving average, but it's closer to that, right? It's actually the starting point of that is moving average. Yeah. So again, you could use a moving average, and then you can use the Fibonacci 1 to 3s, right? That in itself can become a very good system. Yeah. Okay, 7 components of price action base. Support and resistance, right? Before you do anything, you've got to know what's my support, what's the resistance, period. If I'm looking to go long, there must be support, isn't it? Yeah. If there is no support, I'm not looking to buy. Yeah. For me to go long, the resistance must be cleared, right? Without the break of resistance, there's no way you can take a long trade. As simple as that. Simple thing. So, what can you use as a support and resistance? Simple trend lines. Yeah? Trend lines. No rocket science. Again, the Bindle trigger line, which was what you saw in the chart earlier on. Yeah? Obviously, you could use moving averages if you want. You can use pivots, right? On the trigger line, when it is green, it's a buy, and when it is red, it's a sell. As simple as that, yeah? And then I have Bindle pivot points. Again, these are proprietary Bindle FX pivots, which again is based on price action. It recalculates every 60 minutes. Yeah? So again, this is an example here. You got a long, this is the trigger line. If it's green, I got to be looking for longs. If it's red, I've got to be looking for shorts. Then I look for the trading master indicator to be in sync. Okay? Okay, the second, which I use as a support and resistance, is a 1, 2, 3 setup. How many of you are familiar with the 1, 2, 3 setup? Okay, 1, 2, 3. Okay. This is the most powerful thing you can have on your charting software. Yeah. So if I'm looking for a long trade, all I'm looking for is a higher high and a higher low. Yeah, a higher high and a higher low. For a short trade, I'm looking for a lower high and a lower low. As simple as that. 1, 2, 3 setup is powerful when it is at a pivot, trigger, or a ribbon. Yeah. So those colored lines which you saw, right? Whenever I get a 1, 2, 3 setup there, often that is a very good low risk, high probability trade. Okay, this is a good example of a 1, 2, 3 setup. Okay. In my trading, I don't trade breakouts at all. Right? How many of you trades breakouts? Yeah. Often you will see in Forex, right? You get a lot of fake breakouts, right? Often this could happen, say if there's a lot of short covering, amateurs getting in, right? And then they get in at the wrong price, and then the price is retracing, okay? So imagine if somebody's done on a 2,500 account, he's done 5 lots, he gets in here, right? And then the damn thing goes down. Now he's looking at a loss of 400 pounds. He panics, he comes out. As soon as he comes out, up it goes.
Can I ask what time frame you actually use?
Okay, in this case, this is M1.
1 minute.
Yeah, okay. But the concept of a 1 to 3 is universal. It doesn't matter which time frame you're using. So if I'm looking at scalping, like intraday, then I'm looking at 15 minutes, 5 minutes, 1 minute. Yeah. I don't really need to look at a daily, weekly. Often I see, some traders, they're scalping, but they look at a weekly and a daily. You don't need to do that, yeah? If you're swing trading, yes, but scalping, again, the concept of support resistances will be the same. The 1 to 3 will be the same, irrespective of whether it's a 1 minute chart or a 15 or even a weekly chart, yeah? Timing your entry is so important, right? Never, ever, ever chase a long candle, right? Never trade during news time, okay? You know what? I see so many webinars during non-farm payrolls, right? I tell you what, I avoid it. I'm not, I never take a position before major red news. I never take a position after the red news. How many times have you seen, right? Non-farm payrolls and the red news, price shoots off, and within half hour it's back to where it was. Yeah?
Do you trade the news?
I don't. Yeah, I don't trade the news. And if you ask me, what was the news? What are the figures? I said, I don't know. And I'm not at all interested, right? You will often see red news on non-farm payrolls on 2 or 3 months consecutive. It could be similar news. Sentiment could be similar, but 1 month is gone up 100, the next month is gone down 100. And you've got the guys, experts on the TV channels, they're actually giving a reason why it has, because it's their job to give a reason, isn't it? Yeah?
Can I just ask, would I be correct in assuming that you don't look at the economic element?
I don't. It's purely price action based, because after the news release, right, I'm not at all interested in that up move. I'm looking at the pullback, the retracement.
But you have to take into consideration news, because if you're in a trade and there's a news event,
No, but as I say, is that if I'm scalping before the news, I don't take a trade.
right?
If I'm swing trading, then fine. Because again, the system often, I've said in my tutorials, the chart knows the news, demand and supply, emotions, everything's measured in the chart, isn't it? Yeah? Emotions, the fear, the fight between fear and the greed is in the chart, isn't it? Yeah? Entry has to be at the start of the 1 to 3 pattern. Yeah? If you can get in as close to that 1 to 3, so what happens is often, even on a swing trade, sometimes I can get away with a tiny stop loss. What I've actually done is if I a swing trade, if I can have everything in sync, right from say a daily 4 hourly up to 1 minute, and you can actually have that, and then I use the 1 minute to get in, I could get away with something like 15, 20 pips stop loss with a target of 100 to 200. Yeah. Again here, that's a 1 minute chart. Okay, and everything is in sync, right? All red. 1, 2, 3. So a lower high created, and obviously these pivots at that time would have been around here. Okay, so I'm looking for confluences of events, right? So just 1 to 3 on its own is no good, right? There must be confluences. So the more reasons you have. So when you do a trading journal, you could say, okay, fine, my B1 to B4 are all red, the trigger is red, 1, 2, 3 below trigger, entry as close to the trigger as possible, right? One by one, all the pivots are breaking. And I haven't got a clue where the market's gonna go. All I've done is my TP1, the stop loss, is gonna be same as my TP1. As soon as TP1's done, is there any fear? No. Yeah? Because if I get stopped out on TP2, right, it's break even. Then what I do is I trade my stops, trading the trigger. And if there is a big angle in separation between trigger and ribbon, I move the stops halfway there. Yeah? Nobody knows where the market's gonna go. I tell you, beginning of this year, I used to love Theresa May. Yeah? Used to have 300 pip move in the morning, 200 pip move in the afternoon, and even cable was moving violently at the middle of the night. Yeah, that was
sterling against the US dollar.
Yeah.
Sorry, I don't call it table anymore, but
that was one of the best trading opportunities we have had. You know, always have textbook entries. Right? Always ask a question, why am I taking a trade at this level? Right? So again, this is where doing the trading journal helps. Always have reasons why I'm going long. What are my reasons? Yeah? It has to be low risk, high probability trade. Textbook entries. If it's not a textbook entry, not at all interested. It's better to miss a trade, right, than get in at the wrong price. Yeah, as I said, low risk, high probability trade. It must be low risk, high probability, period. Confluences of events, as I mentioned earlier. Again, look, a perfect example. This is again an M1 chart. Everything in sync, 1, 2, 3. Get in as close to 0.3 as possible. And look at it, 150 pip move from M1. Yeah?
Yeah, you said about the textbook entries, about exiting. Do you take any consideration about risk or reward?
Again, as I said earlier on, is the stop loss here would be just below the trigger, TP1 hit, and then I'm trailing the stops all the time. So TP2 becomes a free run. Yeah? I'm not going to put a target of say 75 pips. I don't know where it's going to go. Nobody knows. Yeah. So if there is 150 pips on table, why do I want to exit at 50 pips? Yeah.
So TP1 would be what?
TP1.
Ratio.
Yeah. Generally, it's based on the 1 to 3, right? Based on the trigger line. So my entry has to be as close to the trigger
So would
or
that be based on
0.3.
your stop loss?
Yeah, so roughly on an M1 chart, my TP1 is generally between 15 to 25 pips, depending on the chart. Yeah, so if the stop is say 15, my target is 15, right? Then it becomes a free run, right? Price action reversal patterns. How many of you are familiar with candle patterns? Right? I mean, there's a whole big book on candlestick. You don't need to know everything. The only thing I focus on is long wicks, the tails. Yeah. The other is railway tracks. Only these two things I focus on, right? Again, look for confluences events. Just because you got a railway track does not guarantee a trade. Just because you got a long wick does not guarantee a trade. If you were to look on, say, a 15-minute chart on gold yesterday, a big tail and a railway track. Again, I had it at Bindle pivot points, right? This is an example of a railway track. See, I got confluences, trigger line, red, a big upmove. So what that means is that the bulls do not have the control. The bears have taken the control. As soon as it gets below all these pivot points, bang, you want to get in. Yeah? Stop hunting. Often the retail trader says, oh, it's that broker, he's gunning my stops. Look, the broker's got better things to do than sit and watch everybody's stops. Why does the stops get hit? The entry is poor, not having a trading plan. Yeah? Often, how often you get into a trade, it's losing. The moment you exit, it goes up. So this is where the pros are coming into play. Yeah? Very, very important. Pro traders know when amateurs get in. Poor entries mean that stops are gunned down. Yeah? Often stops happen at 1 to 3 setups, right? Very powerful. So that's when I tend to get in at 1 to 3 setups. I never chase the market. Yeah? Amateur traders get stopped out and the pro trader gets in. Yeah? You guys can become a pro trader. Say yes.
Yes.
Yeah? It's that belief in your mindset. Right? If you say yes, you're right. If you say no, you're right.
Sorry, Jay, could you just go back one quickly, just, please? Thank you.
J, 1, 2, 3, in other words, is just a pull back?
Yeah.